And what's important to me is I always say the internet is not a technology, it's a philosophy. It's a philosophy of decentralized systems where you don't control, okay? And what was interesting is a lot of what the media industry grappled with in the early days of the internet, I think is what the utilities are going to grapple with Bitcoin and blockchain. It's not just something that's going to make your life easier. It's going to fundamentally upset things and enable some of the ideas that you have that aren't possible today.
It's very exciting to actually have an opportunity to spend the time to learn about blockchain and energy. I really didn't know when I was asked. I sort of nodded my head like, yeah, blockchain and energy. I could talk about that while I was Googling, with my phone like that. What is that? And it's, there's nothing like fear of sounding unintelligent to inspire you to do some quick, deep research on it. And I've been really impressed and inspired at what I learned along the way. At Greentech Media, we study the electricity network in great detail, particularly the transformation of it, and specifically the transformation of the electricity network by the proliferation of distributed generation technologies, energy storage, the digital grid, digitization of the grid, the distributed intelligence that is being overlaid on the electricity system, and what that, how that's disrupting the current model of the grid. And so I understood the context, I just didn't quite get where blockchain fit. Like most people, I think I understood blockchain as only relative to Bitcoin. And so it wasn't intuitive when I first heard this that I could make the leap to blockchain and the future of energy. But you do a little work, you spend a little time reading, and the light bulb goes off and like, okay, I get it. There's a lot of things we've been talking about with the evolution of the traditional grid to a smart grid, and now we call it grid edge because our estimation at Greentech Media is that we're really the interesting things that are driving change in the electricity sector are at the edges of it, where the customer meets the utility grid itself and sometimes competes with it or disrupts it or does things that challenge the traditional model of the electricity system. And doing a little work, it turns out blockchain actually, could have an interesting role in furthering that. And so I think it's a great time to talk about it. As Chris said, it's early, so it's a good time to learn about it and start paying attention to it and seeing how it's developing, who's involved in it, where the early trials are, where the early ideas are building. But I also think, and Joy's made reference to this in some of his writings, that it's like the early days of the internet. It was exciting in the early days. We both lived through that. I began in 1990 as a telecommunications analyst in the fiber optics industry, and so spent a lot of time looking at what was going to drive demand for fiber optics. And we spent a lot of time quantifying the number of international telephone calls that would drive the need for more fiber. And we slowly became aware that the internet, that data was going to have some impact on the proliferation of fiber. And then, but we were counting data in, transatlantic cables went from a couple hundred megabits per second to 622 megabits per second. Like, oh my God, this is just that's more capacity than the world will ever need. And because it was hard to conceive at that time in the mid-90s that what we understood the internet to be, just universities communicating via email and little bulletin boards, would actually underpin this whole new way of digital commerce and communication and everything that we have today. And I think in some ways that's how we can think about the blockchain now, and how it's still a little early to say we know how this is going to play out. We have this platform, this is what it's going to do. I think we're still kind of tinkering with it, and understanding the context, I think, is what I just want to put forth here, just a little context of where the electricity network is now, and then the panelists are the experts, and we'll just draw the real smarts in the room out of them. So where the traditional power, how you get power today, even if you have solar on your roof, this paradigm still exists today, that there is centralized power generators scattered around the country, and they deliver power via regional and local distribution grid to your home, and you consume it, or to a business and it consumes it and they send you a bill. The retail utility sends you a bill, and it's a very one-to-one relationship. how your neighbors use power has very little impact on you. Where the resources are located has very little impact on you. You just trust that when you plug something in, the power is always going to be there. And it's very reliable, except in the cases of massive storms, which are increasing. So there is an emphasis on increasing the reliability. But it has traditionally been very reliable. There's been a tremendous amount of investment, and utilities are rewarded for continuing to invest in the infrastructure of the power grid and generation assets, because there's a feeling that energy is the lifeblood of the American economy. And so the monopoly they were granted and the rules and regulations they operate under have that at its heart. There needs to be a reliable electricity network out there, and utilities should be granted a monopoly and a rate of return on their investment so that they don't stop. And we have the power we need as the economy grows. But the interesting thing that's happened is really outside the utilities' own planning. It's not like they came up with this new grid idea. It really happened external to them to a large extent. There were some regulatory forces that said you need to improve reliability, or some environmental rules that said you need to adopt more renewable energy generation as part of your generation mix. But a lot of what was going on was happening external to the utility. It still is today. When you put solar on your roof, you're not asking, it's not a conversation with your utility. They're not saying, I'd like to use your roof to distribute some generation. You're saying, I'd like to use my roof to lower my power bill and transition as much of my energy use to clean energy as possible. And so the utility then has to just react to what's happening. And I think that's the interesting time that we live in right now, is that utilities have a business model that's constructed around delivering to you a very rugged, reliable energy infrastructure and ensuring that you have reliable power, while you are trying to reduce your bill, or in some cases transition to clean energy to the extent that you don't have a power bill anymore. And it's created stress on their business model, and actually created stress on the network that they built, because they never anticipated power flowing back into the network from endpoints, or dynamic reaction to price signals in some cases. There's so many different things that can happen at the customer site that the utility is just left to react to. So distributed energy resources are starting to go out into the network on homes like mine in Arlington. I have a 5.5 kilowatt solar system, and it generates power for me, but if I'm not using it, the utility buys it for me at the full retail rate. So the utility is basically a gigantic battery for me. If I don't need it, they more or less store it for me, and then I use it later in an economic sense, that I get a credit for all the electrons I either consume or send out. And that's a relationship that the utilities are more or less uncomfortable with. It's not exactly how they'd like to see the world evolve, that you can just do whatever you want and they have to pay you for it, and they have to operate a very reliable network without you paying them for it. So it's an interesting time that we live in, and it's only getting worse for the utilities. And I think where there are some that are very proactive in trying to embrace it and understand how they can evolve with it, and others that are going to push back. And so it's a very fragmented market that we live in the US. In other markets, things are a little different depending on how developed their grids are and their electricity infrastructure. But it's a really interesting time. Generation becomes more flexible. Flexible is actually a generous term. A lot of times generation, flexible is, a lot of it is intermittent. The wind's blowing or the sun's shining or it's not, and it's utilities are having to react to generation sources that they can't precisely control. Transmission and distribution becomes more controllable and resilient. That's part of the digital grid with distributed sensors and digital software and overlay. They can do a better job managing that. But again, it's hard for them to forecast how power is going to flow across their networks, even with that advanced control. Loads become more interactive and dynamic. Consumers become energy producers. And that's a key context for us to talk about the blockchain. So, and its relationship to the energy network today is that as this transformation is happening, this is already happening, and there are lots of smart grid technologies out there, advanced metering infrastructure, distributed sensing, distributed generation, distributed storage. That's all going in the network. It's just a matter of is it creating a coherent electricity system, or is it just disrupting the edges of the utility and everyone's fighting back or trying to, change rate structures or anything to respond to it. And so I still consider it a very uncomfortable time right now in the electricity market because it's not planned. Everyone's just doing what they want and understanding that the current rate structures reward them for doing that. And so a quick look, the other thing that's going on, just this notion of the connected home and the Internet of Things, I think that also plays a key role in this notion of energy in the blockchain, is that the proliferation of computing and embedded computing throughout endpoints in the world. It's not just iPhones anymore. That was sort of the first example that, like, once you distribute computing into a palm-sized device, a lot of things can happen. Like just tremendous economic innovation went on. Uber, everything relies on you having a computer in your hand. But now that computing is actually getting low cost enough that it can be embedded in many different devices in the home. And once you get that, once you have a distributed computing network that's not just in mobile devices, but literally embedded in a number of devices throughout the home, managing lighting, HVAC, EV charging in some cases, security, smart appliances, plugs, the whole thing. Once that computing's in there, then you have a gigantic distributed computer or computing platform that a new kind of operating system can run on. And that's where things get really interesting when you're talking about energy. And you get to the point, if this house is generating its own energy, potentially storing its own energy, and all the appliances and devices are reacting to the availability of that energy, or in potentially price signals from that energy, so it can actually make load decisions based on price, you get a very different electricity system than the one we have today, where there is a price, you use it, whether you run your dryer at midnight or in the afternoon typically doesn't make any difference. There are a few markets where there's some time of use incentives. And if you use your solar, great, but if you don't, the utility buys it at the full retail rate, so you're not incentivized to actually consume your own clean energy in any different way than you were operating your appliances or systems before you got solar. So we're getting there, and this is like the context, I think, that really, in my exploration of this, opened my eyes that, like, we've got all the piece parts to do something really interesting with the electricity system. There are just a few bottlenecks to getting there. And that is this notion, and this isn't exclusively how blockchain can work, but I think it's an interesting notion of looking out in the future of the electricity grid. Like, where is this going? What's going to happen? And this is from Pacific Northwest National Labs. They started to work on this with the Gridwise Architecture Council. This notion of a transactive grid where there isn't just centralized generation, distribution, retail interactions with customers, but interactions are happening all in all different directions. You've got this world of prosumers that are generating and storing power and selling it potentially. You have industrial customers, commercial customers that have on-site generation, microgrids at times connecting their buildings or campuses together, and potentially a distribution system operator. You need the wires. You need ways to move electrons around. So someone has to actually operate the plant. But the economics of how that system operator is rewarded or compensated can be very different if there is this distributed computing power out there and lots of distributed energy devices, intelligent devices. So, and some of our panelists can talk about where this vision takes us, but and there's already been some early trials of how that works, but suffice to say, it's really different from where we are today in the electricity system. Even if you have solar on your roof, it can be a very different world in which the solar you have is not just that you consume it, but all your devices are aware of it. They consume more of it when the sun's shining, or if you're not home, you can sell your solar to other neighbors that have an affinity for green energy and actually want to buy those specific electrons. There are a lot of really interesting things you can do once a network like this exists. And the issue, though, there's a lot of bottlenecks to getting here. New technologies, new regulations and rate structures, need for secure systems, pricing definitions, business models, a lot needs to be sorted out. But as I went through the checklist in a number of these papers, well, here's what needs to happen. Here's what's missing. I looked at that list, And then I looked at the list of the attributes of the blockchain, and there was almost a one-to-one relationship. And so that's where the light bulb sort of went off for me, and I thought, okay, I get it. I'll go moderate this panel, because this is actually exciting. And now I want to learn more, and I want to hear more, and definitely talk to our panelists about this today.
Last year, when we first started the Bits and Blocks collab, we were really excited because we thought this whole Bitcoin thing, it's more. It's a bigger deal than just money. And before we go on, I'd like to acknowledge that there's probably a lot of people in this room who know a lot more about Bitcoin than I do, even though I've been working with it for about a year now. And there's also a good portion of you guys who probably don't. And so my job here is to lay the groundworks for the understanding of our communication for the rest of the night. And so to do that, I'd like to talk a little bit about the terminology. So oftentimes if you go online, media or whatever, you'll see that this is a very confusing topic area. There's lots of words being thrown around, and tonight I'd like to talk about 3. So the first is Bitcoin, the second is blockchain, and the last is public ledgers. And let's go into Bitcoin a little bit. For those of you who don't really know that much about blockchain or Bitcoin, you can relax. You don't need to be too nervous. You can take a deep breath, because really on the fundamental level, Bitcoin is really just money, though it offers some very, very interesting potential, which we'll get to later. But if Scott could come up for me, and we'll do a little quick demo about the physical and digital world. So, for example,
I get cash. All right.
Yeah, you get cash. So, for example, in the physical world, if I want to transfer value, for example, if I wanted to give Scott maybe $1. So we have this piece of paper right here, So if I give this to Scott,
right.
Now Scott, did I give you $1?
Yes.
Yes. Are you sure I gave you $1?
No. Yes. I had to take a second at least.
All right. Now, does everyone else see that I gave Scott $1? Yeah. So with that piece of paper comes all these social constructs and cultural norms that establish that that piece of paper is worth value. And then when transferred over, I'm actually giving Scott $1. Scott, do you have a phone on you right now?
I do.
Yeah. Could you take it out? All right. Now, in the internet world, or in the mobile world, for example, I can't really do the same thing. For example, Scott, will you hold your phone up for me? All right, now.
Nothing.
I just said I gave you $1. Now, do you believe that I just gave you $1?
No.
Now, does anyone else believe that I gave him $1?
No notification.
Well, you're right, because I didn't give him $1. Now, in the internet world and the digital world, we can't really do these things without intermediaries. And intermediaries like PayPal or your bank provide a very valuable service that allows you to accomplish things that you couldn't do before. And though they provide a very valuable service, oftentimes when intermediaries are entering the system, they do offer both valuable services, but also some friction. For example, intermediaries, we must all acknowledge, are businesses, and naturally they must charge fees for what the services that they provide. And so that often introduces additional costs, and by handing it to another person before I get to Scott, well, that might introduce additional time or additional wait time for him to receive his value or whatever. And so maybe it'll slow down the processes. And potentially, a lot of times, intermediary companies or things like that like to develop their own proprietary technologies and systems, so they can distinguish themselves from other people. But that often means that they don't really talk to each other, and oftentimes my bank won't talk to your bank, and it might take a good amount of time for things to interact. And also, businesses are businesses, and they have their own target customer segments. And so oftentimes, a particular intermediary is focused on addressing the problems of a particular population, and they'll often leave other segments of the population alienated or left out. So there are built-in prejudices into many intermediaries. And so what Bitcoin is really the cash for the internet. So with the Bitcoin schema and everything, it introduces those social contracts, and there's heavy math behind it that allow me to transfer Bitcoin to Scott just in the same easy way that I gave him cash. All right.
All right. You ready to take it back? Or
Yeah.
do I get to keep-
All right. So
All right.
you can sit back down.
All right.
All right. So, but you might ask, how is Bitcoin the cash of the internet? Well, it is through a thing known as blockchains, our second term. Now, what are blockchains really? What do they do? Well, blockchains allow for Bitcoin to overcome a fundamental principle of the internet that has been true since the existence. It is that if I transfer something to you, it is copied and not moved. For example, on all my interactions, when I email something to you, when I send you texts or anything like that, well, there is no guarantee for you that after I sent you that message, that I do not have it anymore. And as you might imagine, that might be very problematic with money. So blockchains make sure that your money is actually moved and not copied. Now, how do they actually do that? Well, they do that through what is known as distributed ledgers, or your public ledger. And what is your distributed ledger? Well, this is your complete history of all transaction that has ever happened within the system. And it is shared globally, as well as publicly auditable by anybody within the system. So anyone can go in and look at it. And it's often backed by heavy cryptography and a network of verifiers distributed throughout the world. We can go into that later if you guys want to hit me up later, but we're going to skip that for now. Now, so money is really just the beginning. It's just the start of everything, because the transfer of money is really just the transfer of value. And there's a lot more value than simply just money. For example, imagine maybe I want to actually transfer my house deeds to someone else, maybe to my child or something like that. And instead of finding a lawyer and getting all this paperwork and all these documents that show this person owns this and that and whatever, I can just transfer it over. Or maybe I want to share my medical documents, these sensitive pieces of information that should follow me throughout my life so that everyone knows how to treat me. However, right now it's stored with your doctor or with your hospital, and it doesn't really follow you where you go. Or maybe you have particular types of money, like today we have currencies or gift cards or points or whatever, miles, whatever people use nowadays. Maybe we can transfer them or actually use them at other services. Or last of all, what if you could capture the inception of value, like the actual creation of a patent or the creator of music or the author of a book or something like that. And so we really call you guys here today to sort of pick your brains and see what can you imagine, because what we believe is that the potential of blockchain is truly awesome, and that blockchains and energy has some great potential that we could potentially see in the future. And so some of the few things that come to mind really quickly is, what about really low cost transactions? So like microtransactions, like you have your distributed network and maybe I'm paying my neighbor a little amount for when I'm producing energy or something like that. Or maybe you have various pipelines or machines that are talking to each other. Your solar panel is talking to your TV or something like that. And they're able to transfer value between each other. And that brings me to my next question is, what if you could have autonomous, rule-driven, rule-based payments? So if something happens, well then I get paid a particular amount. Or what if using this technology, we can create new markets, new services, using that information that don't exist today because we have a new medium to play with. So, before I go, I'll leave you guys with a pun or two and a little thought to think about. And it's, what if we could stream payments like we could power? Or what if we could rewire commerce like we are currently rewiring the grid with smart grid technology? Thank you very much.
Since we just heard about Bitcoin and blockchain, maybe we should just dispense with this notion pretty quickly, is that, is blockchain for energy, is there any relationship to Bitcoin? Or is Bitcoin cast any halo, negative or positive, around it? And as utilities look to adopt it, or any consumers, is the association with Bitcoin, should we care about that?
Can I just get a little piece off my chest, and then I'll let the
right.
experts talk.
All right.
And being an internet guy, everything looks to me a little bit like the internet, and this is very deja vu. So I'm going to tell just a quick story and then define some terms and let you guys go. But I remember in the early days of the internet sitting with the chairman of NHK at the time, which was the largest broadcasting company in the world at the time. And this was before the web. And I went to his hotel room and got on the internet and downloaded a video of some silly MTV disc jockey shooting himself out of a cannon. And he said, "What network is this?" And I said, "It's the internet." And he says, "Who owns it?" And I said, "No one." He says, "You mean Murdoch?" And I said, "No, no, no." And he said, "Can I?" He said, "Can I own it?" And I said, "No, no, you just don't understand the internet." And what was interesting and what's important to me is I always say the internet is not a technology, it's a philosophy. It's a philosophy of decentralized systems where you don't control, okay? And what was interesting is a lot of what the media industry grappled with in the early days of the internet, I think is what the utilities are going to grapple with Bitcoin and blockchain. It's not just something that's going to make your life easier. It's going to fundamentally upset things and enable some of the ideas that you have that aren't possible today. But in order to do that, I do want people to step back for a second and sort of walk away from people who are just trying to, like vendors who might be trying to sell you yet the next thing that's going to hypercharge your company. This is a fundamentally inside-out way of thinking about things. And it's hard to imagine, just like the internet was hard to imagine for this media company CEO. You really need to sort of reset thinking. I think what's interesting also, just kind of to follow on Eric's thing, the neat thing about the internet was that you could share information to everybody at almost no cost because, like he said, making copies was almost free and you still got yours, right? So that's what disrupted the media business. What's interesting about the blockchain is it's the opposite. It actually makes information look more like a thing. It creates the scarcity that you couldn't do on the internet. And what's interesting about that is energy is the only other thing that I know that has scarcity but also goes over wires, right? So if I give you my energy, I don't have mine left. But if I give you my music, I still have mine left. So in a way, there's this really interesting one-to-one match between the real value of the way the Bitcoin and blockchain work and how energy works. And so it would be a waste to just use a blockchain as just some sort of transaction layer thing that we adopt to like do meter billing, right? It's actually fundamentally could be adopted at a core thing. And what's really important is that, like you said, that Bitcoin is so early right now that you could fit the core developers of Bitcoin in this room. And they're still hacking on some of the fundamental things. And if you remember in the early days of the internet, like if we had figured out that there would be spam, we would have built the email protocol different. If we knew there would be IoT, we would have made more address space. There's a whole bunch of things. If only we understood the applications, we would have done that protocol differently. That's where we are. So right now, today we have putty. We could turn Bitcoin into almost anything. In a little while, it's going to be Lego bricks, where a lot of stuff are going to be black boxes that people won't want to touch. And then eventually, you're going to have a dollhouse that you either buy or you don't, but you really can't modify it. And so in this point, I think that the danger that we have is that we're rushing ahead so fast because there's so much investment in this space that everybody's sort of trying to productize and vendorify a system when it's still kind of in the before we figured out what we're doing phase. So that's sorry, it's sort of a rant, but just one thing in terms of timing. The other thing is the words have already started to become suitcase words. So just to be really clear, Bitcoin means many things, but there is the Bitcoin, which is one blockchain that comes from a Genesis root, and it's all one system, one network, one free software project. And then there are what are called altcoins, which use the same software but are based on a different Genesis root. So it's a different pile of money but run the same software. So they're kind of like knockoffs, let's just call them, okay, because they're not represented here, I don't think. Then there are people like Ethereum and others who have made useful innovations on the core idea of Bitcoin. But the difference that I would say, and I want to be mindful here because I don't want to be negative about Ethereum, but Bitcoin has $6.5 billion worth of value, which is basically a $6.5 billion bounty for anybody who can break the system. So you've got that much robustness. And the really important thing about the internet and crypto and everything like that is that you don't come up with your homegrown crypto because chances are no one's going to actually try to figure out whether it's broken. And it's really hard for yourself you yourself to figure out if it's broken. People will break into systems only when the return on breaking into your system is worth the reward, right? So usually what happens is you spend $1 billion building a system, and finally when it's worth breaking into, they break into it, which is kind of sucks for you, right? And so what you want to do, and this is the network effect, and why I think Bitcoin is different from buying an ERP system or different from buying some sort of normal piece of software, is that you're putting a lot of value on a system, and the security of the system is really important. And so the point I want to just make here is that Ethereum is really interesting because it has a lot of features that Bitcoin doesn't have. So if you can't do it on Bitcoin, I would do it on Ethereum. But Ethereum, I think, is in the $100 million range in terms of the bounty. 400. Okay. So, but it's a lot, but it's not as much. So if you're going to make $1 billion transaction, probably better to do it on Bitcoin. If you need to code on the chain and you can't do this on Bitcoin, I would use Ethereum. Someday these may come back together again, but you need to pick the platform that you're working on. And when we say blockchain, I've heard some people say Excel spreadsheets are blockchains. You know? So it's become one of those words that everybody calls everything a blockchain. But I just want to be very clear. There's the blockchain, which is a thing that's connected to the Bitcoin. There are blockchains, which are cryptographically secure ways of having a public ledger. And then there are blockchains, which people, lowercase b, where governments say, oh, I'm going to issue some cryptocurrency, and we'll just use a blockchain, which I have no idea. I'm sure they're thinking about it, but I have no idea how they're going to secure it because it's actually really hard. So we can argue about whether the Bitcoin community is the best one or whether Ethereum's good or whether these other things are good. But it's really important to me. The last thing I'll say is that the number of people who really understand this stuff really do probably fit in this room in terms of the being able to design a robust, cryptographically secure network that could withstand billions of dollars worth of incentive to break. It's really hard stuff. It's really not. It's like in the early days of the internet. And again, I use that as the people who understood how to do the background and the BGP protocol among routers. There are probably like a dozen of them. I remember having to chase somebody down to set up my ISP in Japan. It's kind of like that on the internet, on Bitcoin right now. So really be wary of sort of making assumptions that every sort of blockchain solution is the same. Right. You have to be careful about what you're going to put on it. And also, it's really the moment in which you want to immerse yourself into as much detail in the technology as you can, because there's two things. There's the opportunity to find a really amazing one-to-one match. I mean, Michael Casey's here. He's working on our team at the Digital Currency Initiative, trying to, for instance, securitize solar panels at sort of the blockchain level to turn them into really interesting assets where they look like equities and revenue streams. And so they're really interesting hacks if you understand energy, the flow of economics, and the cryptography. So if you don't have a tech person on your team who can be sort of literate at that layer, you're not going to be able to have the full range of creativity that you could. And having said that, I don't know much about power grids and energy, so having said all that, I'm now here just to absorb.
All right. Well, that was good. That was good. Well, all right. So that is interesting. The interesting thing is that you can't go back, right? Like the interesting thing is it's hard to stop the commercial train once it's left the station, right? Like if there is a will to productize things on blockchain.
So my fear is that people forget that the primary value of this Bitcoin idea is this decentralized nature. Mm-hmm. And if you start to say, well, it's easier if we just put somebody in charge, or if we, it's to me like, you know, our mobile phones. Mm-hmm. When I just got back from traveling overseas, the charge, my roaming charge is about my rent, right? And it's a lot of money. That doesn't happen on the internet, because when we made the internet, we set it up in a way so that everything was flat rate, and we just drove the costs down. But we forgot about that when we got to mobile, and we created a mobile internet that looks the same at the application layer, but it's unusably broken at the transport layer because we've allowed monopolies to exist who extort us at that layer. And so I think if you just look at the application layer, you risk breaking some of the fundamental principles that make the internet interesting. And so my worry is that if we get so excited about the application and forget to protect the decentralized nature, you can imagine that we just use this technology to make what we have a little bit more efficient and lose what could be a fundamental architecture change in the grid.
Paul, I'm actually interested in your thoughts on that as like an IBM, former IBM Internet of Things person that found an application. What's your take on that? Like where do you think blockchain is? And
so I largely agree with Mr. Ito. We actually named the paper that we wrote at IBM Device Democracy because we really believe in the decentralized nature of this, right? And we believe, particularly with blockchains, the more participants you have on the blockchain, the more secure the blockchain becomes. So having intermediaries or having setting up like very small systems with a tiny number of players, it kind of defeats the purpose, right? I mean, this is a technology. I really believe IoT and blockchain were almost made for each other because of the value of decentralization, the power that it brings, the additional security. I argue, I like to say that without a doubt, Bitcoin especially, and blockchains in general, might be the single most secure computing environment ever invented, right? And it's not just the bounty that makes it so. It comes with a really revolutionary idea, which is that Bitcoin and blockchains, they function as networks. They continue to function even if some of the participants are bad actors. Now, 30 years ago, when my mother was a mainframe software developer, she would go to the IBM factory, and she would actually see her mainframe. I mean, it was a very small world then, and there was a lot of trust. There's no trust on the internet anymore. There's absolutely no trust. There's no trusted authority. The idea, it's a joke. Security vendors who say they can protect your endpoints or do intrusion detection, it's a joke. It's not possible. It's infeasible now with thousands of devices in corporate networks. It's absurd when you think about millions or tens of millions or billions of devices going forward. This is a technology. It's not just more secure in very sort of functional ways. It's more secure fundamentally in philosophy and approach. And I think but that security comes from scale and size, and not just from the design component. So I think it's really important, as was already been said, we have to have a large number of participants for this to be useful. Bitcoin and Ethereum have a large number of participants. Now at IBM, we spent a lot of time agonizing over stuff. We decided we went with Ethereum because we got incredible collaboration from Vitalik, who's an amazing guy. We got incredible collaboration from Samsung. We wanted to stay away from Bitcoin just because, people are like, oh, can I get drugs with that? And the answer is yes, but we're not going to use that. But that is the, it was a little bit of corporate politics and a little bit of practicality that drove us towards Ethereum. And I think that it's possible to go too far down the rat hole. I think we need to sort of keep at a higher level and ask ourselves, what are the great applications for this technology in the energy business? Because I think it's enormous.
Yeah. Well, so I guess that's...
yeah, let me jump in real quick.
Okay.
So personally, I don't think that Bitcoin is the blockchain and the blockchain is not Bitcoin. Bitcoin is scale on the blockchain, which is what's driving this conversation. Bitcoin is primarily focused on the financial markets. The utility and the energy markets are factors larger than that. So moving into blockchain energy could create a scale that surpasses Bitcoin pretty quickly. So
I guess that's my question then. As we're talking about it, and you make it very clear that it's still early days, like is the blockchain as we understand it now, Ethereum or Bitcoin, what have you, is it up to the task of Internet of Things and energy? Can it do it? Or are we waiting for breakthroughs or more development? Or if we wanted to go there now, what would prevent us from? Or would you be comfortable saying?
You're building a business on it.
Yeah.
As are you.
yes,
Yeah. I mean, we have started 2 years ago, and when I come from energy business, and I'm a mechanical engineer, and I read this white paper of the Bitcoin blockchain, and thought, why only shifting a number from left to right? Isn't there somebody who can enhance that technology? And I discovered the white paper of Vitalik, and I immediately wrote to those guys, come here, we have, the company I work for they produce hydropower plants, and close to every third hydropower plant worldwide was produced from this company. So we know a lot of different markets, development markets and developed markets, and we know how in different unbundling stages are and all the different problems they have. And so we had like thousands of problems. So Vitalik came to Vienna, and he was there with Gavin, and we started to speak, and we said, your ideas that you have, could we just see how that could fit into the energy market? And then we started to make workshops, and we probably went through so many different models. And so it was a very early beta that I made on Vitalik and Gavin, and it turned out very good. I also invested in the crowdfunding, yeah. And so half a year ago, when they finally launched the blockchain, and it came live, they were all quite relieved, and I mean, it was a hell of a work that they have done in 1.5 years. And so we realized that actually that is exactly, as you say, it is perfect match for the energy market. You can solve so many problems, and you can open up so many other business models. And the problem that we had is we had so many different business models there, and every time the enemy list was way longer than the friend list for every different business model. And we said, well, for a startup, that's not what we should pursue. But so what we found out at the end is that all the business model had one in common, and that's actually what we're building, what I'm going to show you later.
Okay.
Yeah. So no, I don't think about Bitcoin at all.
Yeah. Okay.
So we just looking. I mean, so Gavin, Jutta, Aaron, and Vitalik as well. The question is, we need way more scalability, and we need also the ability to transact private information, zero knowledge proof. So there is a lot to be done. That it is ready for the energy market, but there is already some applications that can be done. Yeah.
Okay.
And
Well, let's talk about that. That's actually some of my next questions is, where do we see it first? Like, how far are we away, and where does, Lawrence, you're actually building a little microgrid that's starting to use this.
Right.
Because if we assume that blockchain is theoretically up to the task, then what it runs into are business model issues, market structure, regulatory issues that just prevent these kind of relationships from happening. These transactive energy relationships from happening. So where's a good place to watch for to see blockchain enter this market, and where do you think it ends up?
So our first place is a prototype. So we've actually got a little block in the microgrid where we have 5 prosumers on one side of the street. These folks all have PV panels on their roof. We've actually just installed our first transactive grid elements, which are the things that count the electrons coming from the PV system and the electrons being consumed by the building. So the other side of the street, we've got a whole host of neighbors that are buying green energy from a utility. Well, they're buying green energy through a system of RECs, which is a financial construct, but the real green electrons they're getting are from their neighbors. So I think one of the core ethos that we're focused on is that this blockchain energy market, distributed energy market, should follow localization, right? That even when you start looking at some of the grid edge models that are starting to pop up, distributed energy economy of the future, it's all about localizing consumption, production, and transaction of these things. When you look at the reasons to put together a microgrid, a lot of it is built around resiliency. So when you localize these things, you don't tie them into sort of a central command and control system. They can react, pretty seamlessly. So I think that first it's going to take a bit of education and a lot of conversations with utilities. We're having a few. We're kind of frenemies. I'm not quite sure how we're going to work together yet. But yeah, I think it's probably going to happen in the US first above the regulated market until we start having some real conversations with regulators about getting serious about where this industry is headed. The utility industry is not going to look like it does today in 10 years.
Right.
So maybe just because Lawrence gave an example on the consumer side, just to give an example of application on the very core of the energy market. So the energy, as you said, Scott, it's going into, there is more players entering the market. Yeah? So there is a lot of interesting markets in energy trading, and one of the most interesting is the secondary reserve market, so which is stabilizing the grid. So secondary reserve market, usually in most of the developed countries, is only restricted to specific sizes that you can trade. So out of that came different business models like the virtual power plant, which bind a lot of small into a package. So, but why is there a size of this 5 megawatt or 10 megawatt, depending on different country, to participate in this market? The simple answer is because the accounting system of the transmission system operator is not able to handle more operators on the market. So and how does it work? So a day ahead, you have to send your forecast to the TSO, and then at the next day, the delivery happens, and there is always deviations happening. And so the TSO has to find out who deviated, and the cost he had to balance the grid, he needs to account to these guys. So on average, this takes time between 1 month to 1 year, and it's never correct. Yeah, so with the blockchain, what does the blockchain do? So imagine a meter, electricity goes through, you just hash that, and it's some kind of true, because once it's hashed, you can't change that information anymore. Even if you forge that, the fraud is recorded. So that information can be immediately accessed by the TSO, and he can send the invoice 50 minutes later. It increases his cash flow into near real time, and he can allow arbitrary small products on the market, means everybody on the market can participate in the secondary reserve market. It's a complete opening of the market. So this accounting, actually, a simple accounting, is like the biggest bottleneck in the whole energy market. With blockchain, it's easy to solve.
Interesting.
Yeah.
Not only that, but right now, the whole approach to managing supply and demand, we're headed towards a world where production is less predictable, right? And there are big penalties for moving large quantities of electricity around.
Yes.
We need systems that are much more localized, and they're also much more autonomous. Today, PG&E can switch off my air conditioner, right? And BMW can switch off my car charger. But those are all very centralized functions. They're relatively slow in demand response. When we developed our prototype at IBM with Samsung, we set it up so that washing machines, dishwashers, appliances, car chargers, they respond to the output of your solar panels. Because your number one source of consumption should be your own production, right? Everything else is less efficient and more expensive. And although some of us who got in early are going to enjoy net metering for a long time, the reality is, in a relatively short order, the vast majority of consumers in the world are going to find that buying grid electricity from the grid is more expensive than they would like, and selling it to the grid is going to be much cheaper than they would like. And they're going to want to consume to maximize the extent to which they consume their own production, or at least have a friendly agreement with their neighbors.
Well, and I want to just build on what Ed said. This is really all about reducing friction in that market, right? So capping things in an arbitrary rate for a generator size is there for the reasons he said. It's just the cost of transacting that is way too high. Once you eliminate that cost, then you can bring it down to very small generation plants. And consider megawatts and negawatts, right? So FERC just ruled that we're going to have a negawatt market here pretty soon. There is a really good reason to not consume energy as well. If you can tie that to financial considerations as well, it's a very large market.
Fantastic. Let me ask a really naive question, because you kind of hinted at least the possibility of it. If the power grid back in the 90s was blockchain enabled, could Enron have done what it did?
I think that has more to do with how electricity markets have matured in the U.S., right? The early 90s are relatively immature. We didn't have as many of the protections in the marketplace that we do now. The models that are being developed that exist today are open access markets. You cannot withhold capacity. It's not allowed. And that alone would have substantially changed the market dynamic.
Okay. So it wasn't necessarily you'd be catching fraud with your blockchains. It was more market manipulation.
It wouldn't be economically incented to do that, right? When you start localizing things and you actually start building visibility in the system and market response to the system, then it's kind of hard to game that market, right? You're making a bet that you're going to be able to pull the wool over the system's eyes. When you put that into a blockchain, you know exactly who that was, and you are not economically incented to do that.
And sort of more kind of at an abstract level, again, just like I think we should rethink all this power grid stuff like you're talking, I think that even though Bitcoin is kind of an element of money, I think if you dig down even deeper, I'm on several audit committees. So if, for instance, if I gave you a contract that said, I will give you $1 million tomorrow if it rains, and there's a 50% chance of rain, I have to book it as a $500,000 valued asset, when in fact it's a contract that's either worth $1 million or zero tomorrow, right? And if you are able to encode the value of the thing in a conditional statement in some sort of contract, and your accounting system and your markets are all a whole bunch of things that you don't strip all the information away every single time you move the thing around. Because I end up on these audit committees with piles of numbers that have been copied from spreadsheet to spreadsheet, when in fact you should be able to say, all right, what happens if it rains tomorrow? Right. What does the system look like? How do we then adapt for that? And is this a payable or is this a receivable? And if you get smart money, again, you can still do fraud, but the clarity of the system and the ability to deal with things like fluctuation amplification, both on the power side as well as the money side, changes a lot. And so it not only eliminates a certain category of fraud, it eliminates a whole category of sort of opacity that exists. And so one of the things that, again, this on the money side, I see the same parallel. Well, people are sort of saying, all right, well, let's still keep double entry bookkeeping because we know how to do that. And let's just use Bitcoin to sort of make it easier to move this stuff around. I'm like, no. Double entry bookkeeping is kind of where we want to start innovating because we haven't changed that for so long. And so similarly, I think I really want to start questioning the fundamental thing. And even with the power thing that you're talking about, I think you mentioned in your thing, well, power is power, but not really, because green power is different from neighbor's power. So just the fungibility of everything that we've created in order to scale has reduced a whole bunch of information that we may be able to capture again now that the power, I want to buy power from you, but not from you, and I want to do it this way. And so that I think adds a complexity, but adds a whole bunch of richness that I think will come out.
Well, the biggest richness is choice.
Yes.
Right? Besides de-risking the market, because you can actually see what's happening in the market, now you have more choice and choice based on information coming from multiple points around you, from the Internet of Things that is actually your power grid. What I want to do, when I want to do it, who I want to buy it from, who I want to sell it to, and who gets to touch it in between.
Right. Interesting. Well, that brings me to, I guess, a couple of ways of looking at this. That, sometimes Internet of Things and smart appliances feels like a very first world, very developed nation, big expensive house full of fancy Samsung appliances, and they get to participate in this. And isn't this great for them to have yet another innovation? Right. Which is interesting, but it also feels like some of what you're describing, that this is as applicable and as valuable in a emerging market that doesn't even have a grid, that wants to start from a clean slate of paper and say this is a better way to operate an electricity network and market. So I guess my question is, are these both going to happen sort of simultaneously, or how would you see the blockchain entering the global market?
These are going to look very different in mature and emerging markets, but the technologies are going to come up very quickly in both. I actually used to live in Nigeria for a while, and the National Electric Power Authority was also known as Never Enough Power Anywhere, which was ironic for one of the world's biggest oil producers. But you just got used to the idea that you'd be out of electricity for 4 hours a day. In those countries, in many countries, where there is not an existing robust consumer grid, there may never be one. These technologies are useful and convenient in places like Northern California, right? We can have choice, right? We talk about community choice in Northern California. That means we can have artisanal, green, humanely raised local electrons. But if you live in many parts of the world, it's this or nothing. And it's demand response is not a choice, right? If you have solar panels and a battery with limited capacity, the appliances that you own, whichever ones they are, need to respond to demand. They need to respond immediately because you can't draw on the grid. So these things actually will be more powerful in those emerging markets. And I think the opportunity in there in some ways will be greater and faster because today those people are buying diesel generators, right? And those things are expensive. They are noisy. They need fuel. That fuel, especially in an emergency, is really hard to get. So I think actually in many ways there's a really bright future for these technologies in emerging markets.
Okay.
Scott, so maybe to add up to this, I mean, every time we developed a business model, we went to different countries to speak with different key players in different countries. So we have been in Chile and Georgia and some other developing countries, and we also went to regulators. So we showed the regulator, look, we have the possibility and to implement that technology here, and we save a lot of integration cost because we don't have to make a full vertical integration to access different business models, because it's just like one node on 1 meter, and you can reuse it for a lot of different business models. And finally, some of the regulators, they came up with new ideas. So we even have the statement, hey, we don't need balancing groups anymore with that technology. We can reinvent that whole system. And so actually, regulators, they like recommended us to other countries. So we were speaking then in Georgia together with the Austrian regulator, together with the Georgian regulator, and they are right now in the stage to unbundle the market. So they are thinking, what systems do they exist there on the market? So do we implement balancing groups, and how do we share the responsibilities for the frequency stability and so on? So we demonstrated what is the cost for balancing groups implementation and what is the cost potentially on this technology. It's a massive infrastructure cost because you can reuse that installation for other business models. And you don't have that discussion anymore that the government or the regulator forces the power plant owner, which is now more and more becoming a small private individual, to implement something that he doesn't want, only for reporting purposes. But now it's come to the verge with that technology that he can implement something that he's on the one side fulfilling the regulatory demand, but on the other side access other business cases that are where he can earn more money. So we actually see that there is a lot of countries that are ready to make that frog leap, and we also believe that this it's like in Africa, as you say, they don't have landlines. They went to mobile phones.
Right.
And actually, the demo what you're going to show today is in South Africa.
Okay. Super.
Yeah, I had a conversation recently with some folks at a UNICEF event talking about this specifically and how to move this into countries that don't have energy infrastructure to eliminate some energy, some of the existence of energy poverty. And by taking this stuff down to a community level, actually, having people in the community own this and then transact the things between themselves, they not only get the benefit of having the energy, but they also get the benefit of the cash flow that's generated inside the community itself, right?
Sure.
So it's sort of a self-feeding system. You can bring in a third party to finance the thing, and the folks in the community can actually own it, create their own secure market inside this thing, transact amongst themselves.
Oh, great.
Is there any push to use the blockchain for purposes of reducing the energy that the economic models and financial systems for the energy world would be using? And does that mean that there would be more room for something like a permission-based ledger or proof of stake rather than proof of work? And secondly, would there be any kind of way to mirror kind of what you were saying, the locally owned energy cooperative in something like a permission-based ledger?
So I might take part of this, and Ed, you might need to take the other part. We're in proof of stake. But I don't see one universal energy-based blockchain. I see networks of blockchain that overlap, that touch each other. Again, you have to follow the physics. The electrons are only going to make it so far. You only have a customer that's in reach of those electrons. So why would you build a system that actually bridged those gaps? So I think that that and proof of stake, you're right, is going to be a really important factor in limiting some of the huge energy costs that are associated with blockchain, specifically the Bitcoin blockchain.
Right, and this is actually one of the reasons why I'm not a huge fan of the Bitcoin blockchain, because it is by design of arbitrarily increasing complexity to do the proof of work. Proof of work is useful as a way of cryptographically securing the data in the blockchain. It's not necessary for it to be this difficult. Yep. Right, so and that's one of the things I like about Ethereum. It's not arbitrarily ever increasing kind of a model. It's designed to grow with demand and usage.
Well, so if you're localizing this, and if the devices themselves are actually part of the network, and you're building it into a microgrid that's functioning itself, you know where it is, you know what it's doing, you know if it's supposed to be in that system, and you don't have as many concerns about a 51% attack.
Yeah, I slightly disagree. I think there's two layers of
Sure.
what we're talking about. I mean, I think the proof of work is trying to prevent a certain kind of attack that proof of stake and some of the other examples that we're talking about don't necessarily address the particular kind of attack that we're talking about. And I do think that the way we're doing proof of work on Bitcoin right now is not the end all.
Right.
I don't think that I've seen a viable alternative that keeps the thing as decentralized as we want at that layer. I think, having listened to some of you and having just been thinking about it just now, that there may be something very interesting in turning, so basically, I mean, for those of you who don't understand the concept of proof of work, is that by making it very, very computationally difficult to do the encryption that secures the ledger, and the people who do that computation get paid in Bitcoin, and so that creates an incentive for people to put a lot of computing horsepower into making the system super secure. And you don't need it that secure maybe for some things, but I still think there's a risk of scalable attacks against systems that don't have high security. The thing that we've been working on and thinking about, a lot of people are thinking about, is there a way that does proof of work, but where the work is actually useful? Because right now you just sit there and you try to cool these crazy machines. Well, cooling a crazy machine, well, that's generating heat, that's generating some kind of energy. So the question to me would be, is there some sort of form of energy generation that's linked to computation or something like that, where you're generating energy, but also doing something that's somewhat useful? So one of the questions that we don't have a solution for instance, is can you do proof of work where the work is also computationally useful? Like, could it be running a program that's also useful, but also does a hash? So computer scientists are thinking about that, but it could be that there's some sort of relationship between the moving around of power and the generation of this proof of work, because, proof of stake is kind of similar to that, but I wonder if there's something more sophisticated, so.
Yeah, so one of the projects we work on is Project Exergy, and it's about combined heat and computation. You know, the majority of the energy we pull out of the ground actually is used to make heat for buildings, process loads, industry. More than half of the energy in most cases in a data center is actually used to cool data centers and cool compute. So one of the projects we're working on is actually figuring out how to run compute hotter at a temperature where you can actually provide primary heat through computation. So systems like this eliminate some of those problems.
One mainframe per home.
One very hot, small mainframe per home, yes.
From the perspective of a local PUC or a local energy provider that's interested in going greener, how would you use the blockchain? What would be the next steps? What rules would you put in place? And is it happening anywhere in the US now or elsewhere?
Great question. Thank you.
Just PUC?
Yeah, the Public Utilities Commission, the local regulator.
Okay. So we have different terminology.
Yeah, that's all right. Anyone? If I'm a PUC, what should I be thinking about?
Yeah, if I'm the PUC, I'm thinking about how I can reduce risk in the system, right? The first place I would want to put the blockchain is probably in the meters themselves. So you don't have questions about counting electrons at the meters. And you can also do other interesting things that smart meters can do, but still hash the blockchain and secure those meters. That eliminates a lot of the financial friction that's in place for the existing regulatory markets. We made some comments.
Is that something that the PUC can dictate? It almost feels more like a utility decision to start putting it in meters. Like if I'm thinking about regulatory reform.
Well, I think there's the generators and the grid operator, right? And the grid operator wants a very accurate accounting, so they do have a financial incentive, right? I think if you're a PUC, as I'm starting to think about this, your point about localization and your point about granularity, those two come together. If you're a PUC, you care about a number of different things, but one of them is the efficiency of the overall system. Yep. Right now, a lot of electricity is moved around unnecessarily, right? This would provide a very strong incentive to produce and consume locally and to localize that as much as possible. So there is a case for regulators to regulators may not necessarily require the blockchain, but they can require a level of granularity and specificity in the system design that means it's very likely that that's one of the best choices to implement it.
Well, and so for the Public Service Commission in New York, as regards to the REV proceedings, REV is sort of ideally aligned with
New York's
blockchain energy.
Public Service Commission has something called Reforming the Energy Vision. Yeah,
yes.
that's underway right now to rethink the electricity markets in New York.
So in a broad sense, what they're trying to do is they're trying to promote energy democracy and actually create a platform. The utilities themselves would be turned into one distributed services platform provider who just makes sure that there's something there that electrons can go through. And then you can produce and consume electrons, buy and sell and trade the value of those electrons across that grid that the distributed services platform provider is meant and regulated to keep in place. So it would align pretty quickly with REV. Texas is another really strong market. California is obviously going to be an interesting market for that.
You could use blockchain so that you would essentially not have to be connected to the greater grid. So you'd have no transmission loss, essentially. We have 20% transmission loss.
You could reduce it. I don't think we're going to eliminate utility grids anytime soon, but yeah, you could eliminate it.
Maybe just to think a little bit further, the blockchain is not yet there. If it's faster, so you can get faster if you make it a permissioned ledger. For example, the primary reserve, I mean, why we have these problems to stabilize is because we have less generators, means less inertia in the grid. If it means more solar, you don't have inertia, then the fluctuation is faster of the frequency. But actually that, like the primary reserve is programmed into every governor of a generator, that you can make as a code of an energy trader, which is, 60% of financial industry's trading bots. And you can make trading bots into a house, and this trading bot makes a house a single trader, and you can put into the code the compliance regulations that it's checking on the secondary reserve. So actually, yes, you could potentially do that, complete a few houses between themselves, but not yet. But you must completely look everything what they have now is with those how fast everybody's reacting. You can completely redraw this in code.
So I have a secondary question, sorry to hog the microphone, and that is, do you have to have internet or intranet in order to have this system work?
Yeah, so some of the technology we're looking at is actually setting this up in MeshNet so that the nodes can actually talk between themselves, sell, but I mean, internet, you need backup systems behind that because we are talking about running a grid.
It's different in every country. Some countries communicate via internet, some power line carrier. You can use power line carrier, it's possible. We haven't done it yet, but I mean, from the power plants that we have built in the other company, that's no problem.
Right, but fundamentally, whatever you use, right, this does require a continuous connectivity, or pretty close to continuous.
Yeah.
You mentioned the word visibility, and so we've spoken a lot about infrastructure and systematic changes that blockchain might have. But what about on the consumer level? How would this impact people?
So I think if I could take that one, I think on the consumer side, I'm a big believer in the idea that most consumers will not know and should not care whether or not their appliances use blockchain, right? It's like saying, does your dishwasher run on Oracle? Who cares, right? But I think, and if you think about it, right, people say, oh, you can save, 0.2 of a cent by running your dishwasher later in the evening. It's already, we have spent more money thinking about that question than it was worth answering.
Right.
And this is why we need smart devices, but we need them to be autonomous, and we need them to be driven with some level of cognitive computing. And I always love to bring up this example. I made our home smart, and I thought I was being very clever. I set up a program with if this then that, so that when I arrived at the house, the doors unlocked and the lights came on. And this is awesome until the first time you come home after everyone else has gone to bed. Right. And the truth is, we need these systems to respond autonomously, and we need them to be smart enough to understand when we have exceptions to the general rules, right? And I think the level of what I think I'm excited about is the level of brain power that's going in these ordinary devices is becoming enormous. In fact, it's 1,000 times more than what we ever had before, and so that is possible. But I really think from a consumer perspective, these are things that ultimately should happen automatically, and then if you don't like the result, you can override it. But the automatic nature of this stuff is very important, because if I have to think about every decision I make, about every trillionth of a kilowatt hour that I save, it's never going to happen.
So maybe to add to this, maybe I'm not sure if that answered your question. I'm sorry, Paul. So the price for consensus is transparency. You can always see in the blockchain what happened, and that's actually a very interesting attribute of the blockchain. But if I think about all the discussions in Europe that is going on demand-side management on the household level, where a lot of private information is being disclosed, then yes, that's a problem. So for example, in Paul's case, I could see what he roughly has programmed into his smart contract at home. Yeah? So I know now he's arriving now at home and he will wake up his whole family. So I could see that on the blockchain if it would be on the blockchain. So, but there is some cases, so there is technology being developed. So there is even one here at the MIT, the Enigma project, and there is Zcash and zero knowledge proof. So there is different projects that are working on solutions that you can also have private information on the blockchain. And on the one side, it's a bit like contradicting. Why private information on something that is known for transparency? But it's very simple. The very simple explanation is, so I have recorded something on the blockchain, and when the data happened, it was hashed. But the data is only accessible to me. But if I share that data with you at a later stage, you can check through this hash if the data is still the same. So if I changed only one little piece of that data, the hash is not the same. So you can, in that case, you can reuse the blockchain to see if what I give you is really true data when the data was generated. So that's something that goes into it.
Right, and these technologies are just essential for energy, for healthcare, right? Every conversation I have, right, I mean, I believe privacy and blockchain, privacy and transparency can actually go together, and these are exactly the mechanisms for doing precisely that.
We even believe this is the holy grail in the whole thing.
Right. Yeah. One quick thought on this, and maybe another complete meeting, is the concept of tokenization of energy. So you're not really going to care about the $5 it's going to save you on your energy bill, but you are going to care about other things, like how that electricity was produced, who produced it. Was it produced in my community? That's important to me, because maybe if my neighbor produced it or somebody down the street produced it, the $5 I give to them, they're going to spend in my community. But there's a whole set of things that you can build into that token for energy that you set on your device, you set and forget. I care this much about the energy that I'm consuming. I want it to come from here. I want it to, arrive seamlessly. But yeah, the $5 a month is not really going to move the needle.
Can I just make one comment? Because this is kind of what I was trying to guide at the beginning when I talked about suitcase word and blockchain. Blockchain doesn't solve everything.
Yes.
And if you don't have a network, you don't use blockchain. And a lot of what you're talking about I don't want to be rude, but some of them don't really have anything to do with the blockchain. I mean, like zero knowledge proofs and hashes and all, there's extremely valuable tools that we can use to solve all kinds of solutions. And I guess one of the things I just want to be careful about is that I see people saying, oh, we can use the blockchain for this and for this and for this. I say, no, you could do that identity with this, and you could do that just with hash functions. And I just saw on here, guard time is here. I mean, you can do timestamps without the blockchain. I mean, and then what's happening is everybody's starting to call their product the blockchain because everybody thinks they want the blockchain, and everything is becoming blockchain. But I think it's important that everybody be a little bit precise, and that the blockchain has started a conversation in the literacy around things like cryptography and distributed systems and consensus and IoT, which are really, really valuable and interesting. But what I don't want is for everybody to have to call it a blockchain in order to sell it, and then every CEO saying, we just need the blockchain, because there's so many wonderful things that we can do that have nothing to do with the blockchain.
Which color do you want it?
Yeah, and I think it's still at the level of granularity where you should always be asking, do I actually need the blockchain for this? Should I just connect it to the blockchain somehow? And because anyway, just wanted to just flag that.
There's an energy penalty to doing that.
Huh?
There's an energy penalty to pegging everything to the blockchain. There are lots of reasons.
Yeah, there's lots of reasons not to use the blockchain, and I wouldn't call it the blockchain if it didn't have some of those elements. So.
Yeah.
My curiosity is whether what you had mentioned, that there is a natural scarcity in electrons that go over the wire and are not copied, which is exactly what the blockchain tries to give us. If we have any research or any notion that this will come, that we're going to have kind of a proof of electron, or kind of conflating the basic concept of the blockchain with delivering electricity, because it sounded a little bit like that for a moment in the beginning of the panel.
So I was just being very metaphorical and actually more posing a question. So I don't really have a theory, and it could be that it's a bad analogy, but what I find is really beautiful when it happens is when you find a whole, two things that are the same thing and somehow you can link it, rather than abstracting it, rebuilding it, and connecting it again. And so it's more of a challenge to you guys and to MIT to see if there's some sort of way to connect it.
It's terribly confusing, though.
Well, but if you just, for instance, go to the metering hash thing as an example, right? So you know, when energy passes through a meter, you can measure it, you can hash it, and it becomes a thing, right? You don't want to be able to copy that, right? If you've got a serial number and you've got a certain amount of energy that you've passed on to somebody else, the fact that you can't copy it makes that a valuable representation of the energy. Whereas if I send you a blog post, I don't want mine to disappear, and that's why there's no value in turning that into an asset. So I'll let you.
Joy, actually, what you said, you know, like proof of delivery, like it has a timestamp, and you know it happened exactly then, means this data becomes valid for arbitration. So you don't need a third party for arbitration anymore. You just look on the, how everybody calls it, single source of truth, or how, I don't know.
Okay.
My question is really about, you know, we're talking about great uses of a blockchain, and I think this is an exciting, great use is energy distribution. But there's also dangerous uses of the blockchain, and you were talking about how Bitcoin, one, that the blockchain is a suitcase name, or becoming a suitcase phrase. I think that's a great way to put it. But Bitcoin was hurt by the Silk Road and all of that type of dangerous elements of that. So with the lack of regulation and the way that it could be used for different applications like betting and Augur is the first thing that comes to mind. How do you prevent this? How do you prevent the dangerous uses of the blockchain?
I mean, I don't think you want to prevent it at that layer. I think that, first of all, you have more surveillance technology in the world than has ever existed, right? And I remember I was on a panel that worked at the deployment of the mobile phone in Japan. And I remember every time there was a murder, the front page headline was, NTT Docomo phone used in murder. You know, and it was considered for the longest time a tool of criminals because it was extremely valuable in organizing crime, right? And anything that's extremely valuable is going to be used by the people on the cutting edge. And the ability to transfer value frictionlessly, obviously, is going to be extremely valuable for bad people, just like the internet's extremely valuable for ISIS. But I think the trick really is here to not try to take out this infrastructure that could be very valuable. It's to go up a layer and say, okay, how can we create surveillance systems that prevent certain types of uses? How can we try to look, for instance, Estonia has a really interesting program around their banking system where they're retaining privacy but using very sophisticated pattern recognition to try to catch the bad guys without sort of invading people's privacy, right? And so if you apply the right kind of technology at the right levels, you can really go after some of the downsides, but still not prevent some of the upsides. And this is going to be a long debate that includes things like the Apple backdoor encryption stuff, because I do think end-to-end encryption will have a net benefit. It becomes somewhat emotional and political. But I do think that the fact that bad people can use it, they're going to use it anyway. So what happens if you drive Bitcoin underground and you ban it, and make it illegal, what stops illegal people from continuing to use it? They'll continue to use it, but none of us will be able to use it anymore. And by putting it up in the surface and making it part of every day, I think we have a much higher likelihood of getting the benefits and building tools against the bad side.
I actually think, if you're a smart criminal, you should not be using Bitcoin because it is the single best recording mechanism ever developed, right? I mean, if we can tie you to a Bitcoin address, we have all of your history. Prosecutors love it, right? We've had, in the last few months, we've had an absolute sea change in how government officials and prosecutors regard Bitcoin. They've gone from thinking it was anonymous to really understanding it is an amazing record-keeping technology and it is one that is perfect.
That a little bit.
Right.
One that is absolutely perfect for securing conviction. So I think, in general, clever criminals should actually stick to cash.
And clever regulators, they actually love it.
Right.
Because they know way more than before.
How this thing gets to market, like how it gets in the hands of consumers, there needs to be a certain sort of interplay of regulation, private enterprise, and also consumer adoption. And a lot of government, sort of corporations coming together in consortia to make things more universal. You've seen in IoT, no one knows what the hell to adopt because there are hundreds of different standards and people are not used to getting their devices to talk to each other. So how do you avoid that in the infrastructure of getting this thing set up with in sort of the energy architecture?
I don't know that you can. I mean, I think 15 or 20 years ago, standards bodies set standards. Today, usually either it's initiatives or private enterprise or companies, they build really wildly successful ecosystems and they become standards. Unfortunately, standard bodies haven't demonstrated an ability to stay ahead of this process or to figure this stuff out. So I think you're going to see a lot of fumbling in the dark for quite a while until somebody finds a light switch.
Yeah, maybe to give an example, so I mean to find a standard. So there is one smart grid protocol, the IEC 61850. It took them 8 years to find a consensus on the semantics for that protocol. So what we do, we just reuse the semantics because the semantics are open for the data point. And so to answer a question, something updatable.
Thank you very much to the panel and you, the audience, for your questions.
So I just shortly introduce to you what we have been doing the last 2 years and what we are building right now. And then I want to show you a little demo, which will be a call to South Africa. As Scott explained, the markets are changing from centralized to decentralized. And due to the circumstance that generation has to equal consumption, there is the regulation, which besides taking care of the stability of the frequency, is also responsible to have more competition and transparency on the market. So that brings a lot of entry barriers into the market for the new players, out of which is you need to know a lot when you want to enter the energy market, and you need a lot of money. And blockchain has a few abilities that can enable the change of that market faster than with normal technologies. So means we're touching IoT. So if you look at standard IoT systems, it's classical, whichever company you look at, all the large companies, you have sensors on the one side, then you have the sensor are sending data to the cloud, and then you have the analytics, and the data is stored somewhere. And the classical model is the data monetization model, and means you need to trust somebody in the middle that the data, if you send it to somebody else, is authentic. This third party could change your data at any time, so you need to trust them that they're not changing that data, and they could potentially even stop your access to that data. Vendor lock-in, limited data interoperability, and other attributes from the standard business model that we have right now. So what we can build with a blockchain is a completely different business model that we as a platform builder don't even know what data is flowing around there. So means we cannot do the data monetization models because we can't read your data. So means Another thing that the blockchain enables is you don't need to trust us. It means the data, when it happened at your site, at your asset, was validated by the blockchain through the hash. Only you can control who can see the data. We can't do that. And this is auditable. Coders can audit that we can't do this. We translate most of the protocols that are existing in the energy market now into an interoperable language, semantic enriched. And not only that, but we also design an API that, so the classical API, so if you look at the iPhone, every app is actually a dead-end app. So to transact data from one app to another, you need to copy and paste. But we're designing an API that also standardizes somehow a way that the digestion of the data that has been done by a third party, that can be reused from another app. So we believe that will really foster crowd wisdom, that you can reuse the information from different other apps in a new app. And the major difference is that in energy business or IoT, every integration for a specific business model, so I'm sorry, maybe. So on the present models, you have a specific separate integration. So on the blockchain, you don't have that. So it means the integration becomes marginal. We don't have gross marginal cost integrating an asset into the whole system. And it's open source. So how do we do that? We have in the energy market actually more than 300 protocols, but with maybe 10 protocols, you can cover 80% of the energy market. And we're translating these interfaces, and this is a blockchain node. So the blockchain node does a lot of things. It's identifying the data. We slice the data in 4 dimensions, means into different type of data, different granularity, into real-time data, past data, and you can send the data anonymously or with your ID, and then we validate the data on the blockchain, and we save the data in the cloud. So the blockchain cloud. So we are now right now we already have over 100 power plants that we will connect in the run of the next half a year, and it's getting more and more with different utilities just to prove different concepts. So we're connecting them, and they make an own mesh network, an own blockchain. Whereas this, I don't want to say that we're making an own blockchain. It might, because we don't want to decide upon this right now, because several countries, several regulators say they want to have their proprietary thing, and some countries are open, so that's why we don't make the decision. It's actually made at the specific markets. And we also believe that in future blockchains will interact between each others. So that is a question that we don't need to decide right now. And actually, on the platform that we're building, WorldMeter, anybody is free to design his own app and to digest the different data. And I mean, really everybody, like utilities, original equipment manufacturers, like the company I work for, they're building a predictive maintenance app, insurances, banks, researchers, consumers. And it's decentralized. It's not owned by anybody. We just make the gateway where you find that information, where you can try that information, but you could potentially do that on another gateway. So blockchain 3.0, I know that is. So our co-founders, Gavin, Jutta, and Aaron, they're working on something that should bring scalability to the blockchain and hopefully transaction of of private information, and that's why we call it the next blockchain. So the platform we're building, worldmeter.io, and we hope it to be ready at the beginning of 2017. And by then we will already have connected a lot of power plants. So you will go on this, you see the world, and you see information actually that is open by regulation. So you won't see information that is private. And you can search that information because we enrich that information with semantic data. Every data point is searchable. So what you potentially could search for is, WorldMeter, show me solar power plants that are producing energy to the contrary to each other. So it would probably spit out Chile and Serbia. I would say every time in Chile produces energy out of solar, it does not in Serbia, and vice versa. So what can you do with that is you can start to insure the sun. because you can hedge the countries against each other. What does that mean? It means that you need less equity for building a power plant, because somebody insures your revenue. And that is only the beginning, just to give an idea. So when you log in, you see your data, and only you see your data. Now that is nothing new, because SCADA systems can do that. But what is more interesting, and this is the Mist browser. So this is not our browser. This is the browser of Ethereum, just to give you an idea how that might look like. So what we have been working on in the last 2 years was different applications. And there will be different applications. It will be decentralized apps, proprietary apps, and certified apps by regulators or different, let's say, market makers. So a very simple app is asset performance monitoring. Show me how my asset was working. The other one is, I'm a solar power plant. Please show me how I'm performing compared to my neighbors. And if I'm underperforming, I might have forgotten to put down the snow down from the panels. Project development, secondary market. So operation maintenance is predictive maintenance. So Andritz is building an app. If you have a hydropower plant and you give me your performance data, I can, out of my know-how, which I have internally, predict you the lifetime of the turbine. I can tell with which percentage compared to other power plants, which bearing going to break when. Now this is nothing new. Many other companies can do that as well. With that platform, Andritz might not even know which power plant it is, which they're analyzing. So out of that operation maintenance app, because the data can be reused, what happens is you have a technical due diligence, because the data, the interpretation was done in real time, and this real-time interpretation was also hashed on the blockchain. So it means out of this technical due diligence, that data can be reused by another third party, which makes a financial due diligence, and then you have a real-time asset valuation. Means on the secondary market app, what you could do is, if you want to sell or if you want to refinance your power plant, you just put it up there, and somebody who wants to invest or refinance you, he can make the due diligence online, because the data was recorded when the data happened. So the other one is forecast, and then energy trading platform, virtual power plants, balancing group accounting, as I told you before, microgrid management, trading bot, which we called white label utility. So we have designed a trading bot. It's by far not possible to deploy that yet, but we just wanted to see if it works or not. That someday in the future, every household can download a trading bot, and that trading bot makes this house a single trader in the market. And you can tell to this bot, I only want to have green energy, or I just want to have the cheapest energy. And that trading bot you could also download on the Tesla, and the Tesla trades by itself when it's connected to the grid. It should know if you want to use it or not, and when. Yeah. So there is a lot of different applications. For example, emission certificate generation, that is not more than 20 lines of code. And the project that I wanted to show you is actually a project on the consumer side, because most of these applications I've shown here are, let's say, on the generation side. And actually, you can rebuild every business model in a different app. And because we are connecting a lot of power plants right now, by building an app, you don't have to do the integration, to vertical integration to the power plants. You immediately have those power plants available as potential customers. Lauren here right now, he's actually right now in South Africa. We're going to call him now. And I just want to show you where it is, where he is in Johannesburg at a school. Lauren, could you shortly explain where you are and what you're doing there?
Sure. Okay, so I'm in it's a city outside of Johannesburg in South Africa. It's called Soweto, which stands for Southwestern Townships. And it's a city that is, the reason it's here is due to the legacy of segregation and apartheid. And in fact, it's very close, where I am right now, it's very close to where Nelson Mandela used to live in his youth. And I'm in a small school in the middle part of Soweto. And I'm standing here, the reason there's a light is because I've got my car headlamps on, but it's actually dark. And I'm going to be showing you, and we're going to be demonstrating our blockchain prepaid metering system. Should I give you an overview of the project?
Yes, please.
Okay, so for many years I was building smart grid solutions for the African population. And what we were doing is we were building a lot of prepaid vending systems, because there's a massive drive in Africa to replace the postpaid metering system with prepaid. The reason for that is because it's very difficult to recover the costs of the utility consumed, in this case energy, after the fact. So if somebody consumes it, it's difficult to actually get them to pay for it for a lot of reasons. So there's now a massive drive to roll out prepaid metering throughout South Africa and Africa. But that now has introduced a whole new set of problems, because 80% of Africans are unbanked. They don't have access to banking services. So they live entirely in a cash economy. And that means that paying for anything really is very difficult. They have to carry cash, and it's insecure, and it generally increases costs. And the same is for prepaid metering. So now what happens is if they want to make purchases for electricity, they have to physically carry cash to a vendor that's allocated somewhere and buy a token and then go and load those meters, or do the vending remotely. Now we struggle to find ways to actually get those vendors nearby the actual customers. Also, a prepaid vending system makes the energy a lot more expensive, because those vendors need infrastructure, and also there's traveling costs, and it's very inconvenient as well to make those payments. You can imagine if you're in a remote area and your lights go out, now you need to, there's no way you can actually make a payment, because there's no easy electronic way of doing that. So while we were busy dealing with this problem, I was very interested in Bitcoin, and I thought, this is the perfect solution. It's an electronic currency that no banking is required. And also, in Africa, there's the mobile adoption is very widespread. So I built it into the system, and then I just thought, well, hang on, maybe we can do this instead of just for that particular system. We can actually roll this out and make it available to other vendors as well.
Lauren, so I'm sending now a Bitcoin. Can you show the meter?
Yes. Okay. So now, as I'm going to go to the classroom, and there's some teachers there, and it's all dark, and it's going to now make the transaction. So let me just get on down there.
Tell me when I should make the transaction.
Yeah, sure. So I'm just going to head down to the classroom now.
Are you alone there? Is somebody else there?
No, there's a lot of people, well, not with me at this moment, but there's a lot of people that we're about to see. The principal is here, and there's some teachers, some staff.
How long it's going to take you?
Sorry, give me another 30 seconds.
30 seconds. Okay. How long does the transaction take? It takes 30 seconds.
The transaction it should take about 30 seconds. Now, what I've done is I've lowered the confirmation to 0, so it's not going to take a full 10 minutes to actually do the transaction. Okay, here I am.
Okay. I'm not getting back.
All right.
Should I send it?
Go for it.
Okay. I hope I have the right address. Continue. Sending one Bitcoin, 400 euro.
Okay, so we're now in one of the classrooms.
It's payment sent.
Okay, well now we wait, I guess. And we hope it works.
It'll work today morning, no?
In a live demo. So anyway, now what's happening is it's now going through the blockchain. The meter is going to detect the payment. It's going to calculate the tariff and then load the required amount of electricity onto the meter. There's nothing on it at the moment. That's why we're in the dark. And hopefully in a few seconds, the meter should be activated. I'm now just sitting in one of the classrooms here, so you're going to see the staff. Okay, you ready? Just remember, normally in a Bitcoin payment, there's a 10-minute confirmation cycle. So normally there's about an hour for a full 6 confirmations. Oh, there we go.
Oh my God. Hey! party starts or what?
Okay. They want to sing a song.
Okay, cool. So we are actually also now finished, and we also can have a beer now. So thank you very much, Lauren. And
Thank you, guys.
Thank you. Bye-bye.
We completely stayed away from the integration of electronics. And then the 90s came, and my Gen Xers and my Gen Yers came on board. And they grew up with Ataris, and PlayStations, and Xboxes, and video games, and cell phones. And they all went, why is it that I can have a phone and I can talk to anybody in the world? Granted, back in the early 90s it cost $1 billion. But I could talk to anybody in the world, and I can't do that in my soldier equipment.